Good morning and welcome back to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Monday the 10th of February. Moving on to cable now for sterling dollar. As with euro dollar, cable has had a continued bounce on the back of that improved risk appetite that we've seen in the last couple of days. But this chart, I think, still needs to improve, certainly to sustain or to get the bulls back in control of it, because you're still under this uptrend that has been broken. You're also still underneath this 21-day moving average, which has now turned lower. So that, I think, proved to be a fairly decent guide of support through December and into January, and has historically been a decent basis. So I think that needs to be broken to the upside. 64.40 that currently comes in, that moving average. If you look at the momentum indicators, you would argue certainly that the stochastics have turned up, but the MACD is fairly neutral, and the RSI is also fairly neutral as well. So this chart is still on a daily basis fairly neutral. You can't really certainly say that that the bulls have regained control. That's not really the case quite yet. On an intraday basis, though, you do have this base pattern in place above $1.6350, which actually gives us an implied target of $1.6450. So you'd still be looking for a recovery on an intraday basis. And the momentum indicators, disappointingly, actually have turned down through this consolidation that we've seen overnight in Asian trading hours. You've seen a bit of a falling away of the the momentum indicators, so that's a little touch disappointing. Other thing that I would also point out is you've got this Fibonacci retracement the 50% Fibonacci retracement comes in at 164.28. The overnight high, 164.27. So I think certainly these Fibonacci numbers are going to have a part to play in this recovery. You're back actually now currently towards that 38.2% retracement, 63.86. So once again, the Fibonacci numbers seem to be providing a bit of a support. Just recently, there was 63.80 was the low there, but as I said, these momentum indicators falling away might see a retest of that neckline support. But certainly on an intraday basis, you'd be saying that there is a bit of a recovery in play now, and that pattern gives us an implied target of 64.50, which is just around about where those old key lows come in back from late January. So that would be interesting. So we are looking for potentially a slight upward shift and an improvement on an intraday chart. As I said, the daily chart has still got more to do to recover, and that 64.40, which is the 21-day moving average, is the one that I'm looking for. Break above there would be a positive move on the daily chart. So there you go. So that's cable. I wish you good luck in your trading today, and I will speak to you later.